Hi, I'm Don Mecoy. I'm a business news reporter with the Oklahoman, and I'm here today with Greg Womack. Greg is a certified financial planner with Womack Investment Advisors in Edmond, and you've also may have seen him on CNBC and in the pages of the Oklahoman. Thanks for being with us today, Greg.
Thank you, Don. Pleasure being here.
Thanks. I had a few questions to ask you about investing, obviously, and one of the things I was interested in your view on is what should investors be more concerned about today? Rising prices, a sluggish economy, or is it something else altogether?
Well, Don, I think you're right. There's a sluggish economy going on right now in our nation, and those are natural trends. And I don't think there's a lot that we can do. We can be concerned, but is there something we can do to change it? That's the question, I think. And really, sluggish economy, we really can't change it right away. It's just got to run its course. But rising prices, that can be more of a concern that we could probably do something about, whether it be changing daily habits, whether it be carpooling, just cutting back here and there, things that we really don't need, and try to mitigate some of the rising prices. Some of us may even get more fuel-efficient cars, for example. But those are some things I think that we can do as things are slower to hopefully improve our budget and our finances.
Well, as an investor, should I be thinking about adjusting my portfolio to deal with uncertain economic times, or should I just ride it out?
Well, that's another good question, Don. It's hard to say, but history teaches us that time in the market is better than trying to time the market. And for example, if you've got 10 more years left to go, if you're investing in a 401k or retirement plan, probably just continue to do what you're doing, although I would look at the holdings that you're owning and make sure that you're positioned well as far as any trends and investment trends or sectors that are really doing well. You want to get away from trying to time the market, but I think adjusting it to position yourself to be perhaps in a place where you can hopefully have some good returns even though the markets are slow.
Well, you mentioned trends, and one of the trends that we've seen in a big way is energy prices and energy stocks. Do you think that energy prices can continue going up? And also I wonder if you think that energy is still a good sector to be investing in, or is it about run its course?
Energy has done extremely well. It's been one of the top performers in the last several years as far as sectors. And if you look at a lot of the charts of these energy companies, I throw a few names out locally like Devon or Chesapeake, even big companies like ConocoPhillips that are more diversified in the energy area, their price to earnings ratio are still in line with the market today. It's in around 15 PE ratio, 16 range. And that tells me that they really aren't overpriced like we've seen the tech bubble when things were just $300 or $400 PE ratios. Mm-hmm. So I still think there's opportunity. Just be a little more selective and don't chase returns. You see something that's been real hot. But my philosophy is look for things that are more diversified in the energy area and ease your way into it if you're not into it already. Okay.
Well, what are some of the other areas that you like, or other types of investments that you favor right now?
Okay. In investing, you want to look at opportunity, but you also look at consistency. And in a slowing economy, what are things that you have to have? What are things that you need? Of course, we all need to eat. Mm-hmm. We need utilities and a place to, as far as live and have utilities, and go up and down your grocery store aisle. Things that you're buying on a regular basis. Those are things you have to have. So we call those consumer durables. It's good to own a little bit of those, I think, in this type of an economy, although you don't want to load up on them because as the economy starts to improve, they tend to not to perform as well. But a few areas that I really like is utilities. They've come way off their highs, and they pay a very good dividend, some of those anywhere from 3 to 5% dividends. Another area is healthcare. We still need healthcare. I believe there's some areas such as some big pharmaceuticals, medical equipment. That's a trend, I think, as people need their knees replaced and hips replaced as we're getting older, those companies, I think, will be in position to profit. And then also, we don't see it on a day-to-day basis, but we hear about it on the news, I guess, is Homeland Security and Defense. And we've done extremely well with those, and you look at their earnings and their growth potential. I mean, the defense budgets are still going up, and these companies have record backlog orders. So if the economy goes down, they're still getting these orders, mm-hmm. and so they still have a lot of growth potential. So those are a few areas that we really like. And have done well.
And the stock market in general, are you generally bullish or bearish about that?
I want to say probably generally a little bullish. We'll say bearish. If on a scale of 1 to 10, 1 being bearish, 10 being bullish, I would say probably a 6.5 or 7. And the reason I say that is because there are so many good opportunities, but I think the general market, especially in the U.S. if it slows, and in Europe, there's now talk that Europe could have even a tougher time in the credit crisis and real estate crisis than we've had, because debt levels could be much higher than over here. So we've already kind of gone through that initial phase. So all that said, I think there's still a lot of good opportunity, and I look at alternative energy. We're scrambling on a daily basis just to try to find good alternate sources of energy. You look at solar, you look at biofuels, coal, clean coal even, and natural gas. Those are all areas I think people should look at to help diversify some of their energy portfolios. And then you look at natural resources in general. I mean, the trend of these emerging countries, it's amazing how much natural resources they're going to continue to need. So I think there's still opportunity. So I'm fairly bullish. I would stay away from, still probably stay away from the financials. I still think there's probably some more downside there. And stick with the areas that are acting stronger right now.
So cautious optimism.
Exactly.
Okay. Well, listen, Greg, thanks for the time, and you've given us a lot to digest. If you want to get in touch with Greg, he has a website. It's womackadvisors.com. Of course, you can see more business videos here at newsok.tv, and don't forget to check out our 3 business blogs also. Thanks for viewing.